Paul Christopher joins us now with more analysis. He's Chief International Strategist at Wells Fargo Advisors. Mr. Christopher, welcome. Is this a case of the dollar actually getting stronger or of other currencies like the yen and the euro getting weaker?
Well, it's definitely a case of the yen getting weaker against the dollar. But if you go back to the beginning of the year, the euro is about flat against the dollar, and other currencies like the Canadian dollar, the Swiss franc, are also about flat. This is really a yen depreciation story.
Paul, which is more important for consumers and investors? You heard in our package that the prices of cars like Toyotas or Sonys are going to come down. And then on the other side, that the profits of big corporations will be affected by this. So which is more important for consumers and investors, these two trends?
Well, that's right. Whenever you have an exchange rate change, it's basically a price change, and some people will be better off, or the same people could be better off in one sense, and the same people could be worse off in another sense. So how do we balance these two, the consumer effect versus the investment effect? I would say there's a third factor that's more important than either of those two, and that is that as the yen depreciates, you're going to see more and more Japanese investors, as well as investors from other parts of Asia, coming to the U.S. financial markets to buy stocks and bonds. That's not only going to boost the value of the dollar, it's going to boost the value of U.S. financial assets, and that's ultimately where I think U.S. investors, U.S. residents, will gain the most.
So if I am a U.S. stockholder and my portfolio is mostly U.S. stocks, you see this on balance then as being a positive for me?
Yes, for right now, it's certainly a positive, especially when you consider that those companies are also selling here in the United States, and those sales are going to get stronger as the U.S. economy continues to strengthen. So it's not just a question of what happens to the earnings overseas.
I know this is a little sophisticated for individual investors, individuals taking advantage in currency markets of all of these changes that are going on. Is there any way for the individual to do that, or is it just too risky?
Well, there are ways for investors to take positions in foreign currencies, but frankly, we think it's very risky, especially for a long-term investor who has long-term goals in mind. That person should be considering that foreign exchange markets tend to overshoot. That means the prices can move wildly in one direction, either up or down, before they finally correct. That could give your portfolio quite a wild ride. We would be more inclined to stay with more conventional stocks and bonds, both here in the U.S. and overseas.
Paul, an awful lot of the moves in the currencies have been driven by the central banks. The Fed here, the Bank of Japan in Tokyo, and of course the European Central Bank. What happens when those three, or one or more of those three, back away from what have been sort of unconventional monetary policy, flooding the system with cash? What happens then?
Well, that's a key question, and investors need to remember that once let's say the Fed, if the Fed decides to step away from these unconventional policies, it's going to be for a reason. And that reason, according to what the Fed itself has said, will be that the U.S. economy will be strong enough to stand on its own and generate good growth on its own. So I think what we can look forward to is once those economies get to that point of being able to manage on their own sustainable growth, then you'll see quantitative easing and other programs like that from the central banks sort of fall away like crutches when a person doesn't need them anymore.
Paul Christopher, thank you very much for your help tonight. Paul Christopher is Chief International Strategist at Wells Fargo Advisors.